Good afternoon from the For the CME. This is Chris Robinson with your Traders Exclusive comment today, Wednesday, June 1st, starting off the month with fresh money coming in, supporting grains. After what was pretty negative fundamental news yesterday, we were sold off last night, but they've come in and bought it. You've got corn, July corn and D's corn at 8-month highs, challenging the highs we've been since last June. This really is a technically driven, fund-driven move. We've had a good 50, 60 cent rally off the contract lows. Largely in corn, it's been because of soybeans. And the funds now, looks like they wanted to support this position. Last count, they're long 80,000 contracts of corn. They're nowhere near what their record high was. I mean, they could build that position up. If you look at the larger positions they've had in the past, you know, they could tack on another 50, another 100 before they really get close to record long positions. Flipping over to the soybeans, though, they're still long 211,000 contracts of beans. Contract highs, again, are within kind of spitting distance, I guess you'd have to say. Look at July beans, though. I think July beans, if we can settle above $11, that'll be huge. That will, again, be a kind of a self-fulfilling prophecy. You will see the bulls step in and buy more. So the beans are kind of tenuous. If we can pierce $11, I think, in July beans, you may get another move here, especially because it's the beginning of the month, and you do have fresh money coming in. Next Monday, we're going to start the Goldman roll. That could impact the action between the July and August and SEP contracts as the index funds roll. The Rogers roll has been going on. And again, that's just an index fund where they just always own commodities. So, but as options expire, they roll them. So that could give us some action too as well. Finally, I want to switch over to the wheat. You know, we can't say enough negative things about wheat, unfortunately. We've got a big crop on tap that's going to be harvested in the next 3 to 4 weeks. You've got the US dollar moving higher. Our wheat is the most expensive wheat in the world. So all these negative things. Now, there is one positive thing. If you look at a technical chart, there's a little bit of a trend line down there. Some guys are trying to call a near-term bottom. I would caution people, you know, there's an old expression, if you try to pick the bottom, you better be careful. It's like trying to catch a falling knife. If you are stepping in here trying to be a hero, make sure you've got sell stops underneath. You don't want to be in a situation where your opinion ends up costing you 30, 40, 50 cents. And remember, if you're trading one lot in the grain commodities, every penny is 50 bucks. 20, 30, 40 cent move can get away from you pretty fast. So you've got to be using good risk management no matter what your idea is. But some people think that if we continue to get a move higher in soybeans and in corn, it could force the funds to cover their shorts. Now they're short about 80,000 contracts of wheat. If they decided to flick the switch and buy those back, we could get a good bounce. So that's what people are looking at in the grains. If you want to talk about your hedging, if you want to talk about your trading, look me up on the web. This is Chris Robinson. Have a great day.